How's the stock looking in today's day of trade?
Thanks, Harsh. So, as you rightly mentioned, this is on the back of the new F&O curbs proposed by SEBI. Now, NSE has weekly expiry on 4 of the benchmark indices, namely Nifty, Bank Nifty, Fin Nifty, and Nifty Midcap, while BSE has only on 2, namely BSE Sensex and BSE BankX. Now, SEBI, in its proposed regulation, suggests that each of the exchanges can provide weekly options expiry in only one index. So, BSE, NSE, each will have to choose one index on which it will provide the weekly options expiry on a particular date. Now, it is highly likely that BSE will not choose the same date and the same index to provide the weekly options expiry as that chosen by NSE. So, it is likely that volume on BSE will increase as the traders betting on the weekly options expiry will shift their focus from NSE to BSE. Also, talking about the options volume as a percentage of revenue, 60% is what the options volume account for as a percentage of total revenue for NSE, and the same figure is 40% for BSE. So this shift in volume from NSE to BSE will likely increase the volume on BSE, and this is why BSE is up around 6.5% in trade today. So positive for BSE, but negative for NSE.
Right, and from the markets to the macro, the rupee has touched a fresh record low today. I'm joined by Madhavi Arora, Chief Economist at Emkay Global, to share her views on what's the outlook going forward. Hi, Madhavi. Thanks a lot for taking time out for us today.
Hi.
So, we've seen the rupee, even though it's been trading range bound, we have seen signs of weakness. We have been seeing fresh lows in recent days of trade. What is the outlook going forward? What are the cues that you're going to be watching out for? And also, what's the range that we can expect the rupee to trade in going forward?
So I think to a large extent, rupee has become very dirty currency, right? The Reserve Bank has been sort of managing the rupee, on a daily basis to a large extent, both in the spot as well as in the forward market. And if you look at the FX reserves over the last 3 weeks or so, there's been consistent increase in the FX reserves. Part of it is led by valuation. Part of it is obviously led by the flows the FPI flows that we have seen, which are actually led more by equity than by debt. And that is not reflected in the rupee strength in any way. And if I look at the Asian FX over the last 1 month or so, to a large extent, most of them are actually, appreciating against the dollar, including the CNY, which has become a bellwether currency to watch out for emerging market Asians to track, including that of the INR. So if I look at the FX behavior across emerging market FX in Asia, the trend has been largely mixed, but most of the key currencies are actually appreciating against the dollar, while rupee still is sort of looking to be a weaker player in the current context, which clearly explains that the Reserve Bank has been sort of intervening in the FX market to ensure the rupee does not necessarily, appreciate versus its peers, given the kind of flows that we are getting, and possibly catching up on the fact that, if you look at the rupee movement between Jan to March, it had appreciated massively versus its own Asian peers, specifically China. And since April, rupee has been actually a laggard in the EM Asian basket. So my sense is that the RBI is ensuring that, we remain somewhere in the middle of the EM pack and possibly peg ourselves more towards against CNY than against USD, and against which we actually want to weaken ourselves, given that rupee or India has a massive bilateral trade deficit of almost 40% with China, and any kind of biases or increases with regard to the trade deficit against China would again be reflecting on the currencies. To some extent, those imbalances could be corrected by tactical intervention by the RBI, ensuring that the FPI flows that we are getting do not necessarily inflate the currency.
Okay, all right. Madhavi, thank you so much for joining in, but we might have to come back to you. The numbers for M&M are coming in, and we'll have to take a quick pause on this. So thanks a lot for joining. But shifting focus to the M&M earnings, net profit has come in at 2613 crore rupees, revenue at 27,132 3 crore rupees. That's compared to a Bloomberg, that's more or less in line with the Bloomberg estimate. The EBITDA has come in at 4,117 crore rupees. Margin at 15.2%. That's also better than the Bloomberg estimate of 13.7%. The stock beginning to react, but very modestly at this stage. We'll continue to track that stock, but for the first cut on the M&M earnings, I'm joined by my colleague Puneet. Puneet, numbers seem to be broadly in line or a tad above estimates. How's it looking at this stage?
So definitely compared to the previous year, it is, of course, has grown substantially, but Bloomberg estimates are roughly 28,000 odd crores for standalone revenues. It's reported slightly below that number. Profitability also compared to the last year has been slightly lower, but do note there was a one-time gain in the previous year for the same time. And if you exclude that particular gain, it's on a standalone basis, the company has performed very well as well. The other part to look at for is definitely the margins flashing on your screen. Very, very positive margins coming in this particular quarter. The Bloomberg estimate was roughly around 13.7%. So that's coming in at roughly 15.2% is a very big positivity on that front as well. Even in this particular quarter, we saw the launch of the 3XO, which has been one of the most positive launches for Mahindra and Mahindra. They have said that they will be, they already had 50,000 bookings for the particular product in the first hour itself, which was launched back in May of 2024. And post that, they've done some price revisions as well for the top variant of the XUV 700. That's also been one of the things that has been notable by the street as well. So we've seen competition also decreasing prices, and they have matched the same as well. Another thing to look at will be the inventory figures as well. We have seen, the inventory has been slightly higher for the passenger vehicle industry as a whole, and most of the PV makers, including Maruti and Tata Motors, have reduced prices. But overall, when you look at the results per se, revenue slightly below estimates. When you look at Bloomberg numbers, essentially, if you remove the one-time gain which was there in the previous year, profitability is a beat. But including that, of course, the Bloomberg estimate had estimated for this particular quarter to come in at roughly 2,800 odd crores, but it's coming at roughly 2,600 odd crores.